All right. I am so excited to be here today. The lovely Gigi Lou is not here, so I'm not excited about that. But we have somebody else
But
who's
she's still
here.
part of the show.
She's absolutely part of the
She's
show.
still part of the show.
We cannot have a show
She did
without
not get
our
voted off
Gigi,
the island.
right? So you all know I am Tracey Williams Barnett, and I'm here with my co-host, Mr. Franklin Salas.
Hey everyone, how are you doing?
And we have somebody special here today. We have the one and only Joe Dawson,
Hello.
man in a money-making green suit.
I mean, I'm here because Gigi is not here.
No.
That's my
No.
understanding.
Let's clarify that
Right.
you are here because we wanted you to be here,
Mhm.
Absolutely.
and Gigi could not be here.
And I've listened to the previous episodes, and based off of your previous home buying experience, there was a lot of maybe clarification that I could provide.
Well, I was hiding from you when I was making that purchase, but
That's okay.
And to all the hams out there, Joe is a mortgage lender.
yes,
That's right.
Yes.
Yes.
right.
Dawson Home Loans. And we have him here today so we can share all the important information about mortgages and lending and what's going on in the marketplace. And so where should we start, Franklin?
Well, let's not forget that there is Kelly Harwood in the
That's
background.
Oh, we've got Kelly
That's right.
Harwood representing.
Yes, she's gonna chime in
Say
reluctantly.
hi, Kelly.
Yes.
Unreluctantly.
Reluctantly. So hams, we've got Kelly here, we've got Joe here. They are a super team.
Yes.
Mhm.
And they are your go-to people to go to when you need to find a lender who knows what the hell he is doing.
Or she.
Or she.
Or she.
They.
They.
And I used to always tease Joe and say, he's not just a pretty face. He's actually smart too.
The actually part was just nice to hear. It's like, you're actually smart.
Like you actually have a brain in that head.
It's like, I think that's a compliment.
Yes.
I like it, but I will take it.
So, okay, so we have been talking about the market, which everyone and their mother has been doing.
Yes.
But on this show, which is something that I feel as though we want to clarify,
Mhm.
is because since we've been doing this podcast, I've been hearing from a lot of people, oh, this one has a podcast. This one has a podcast. That one has a podcast.
There's
And
so
then
many out there.
There's so
now.
many out there. And you know what? I want them to win.
Yes.
But
But you want to win.
we
more.
want to win more.
But it's not even
people.
about winning. It's just like there's a dynamic on this,
Yeah.
on the Reluctant Hams that I think is a little bit different.
Our
Yes.
followers are called the hams.
Yeah.
Yeah.
And, that's just how it goes. You know?
Yeah.
I mean, do it in a fun way.
We do it in a fun
We
way. We want to
try.
be relatable. So to all those who are doing podcasts out there, major props to you, and because it does take time and energy and money. But I want to catch up.
Yeah, let's do that.
So
It's been a minute.
What's new in your world, Trey?
Well, we all just saw each other at the G-Car industry event, right?
Yes, those
Mhm.
things are very interesting to me.
Yes, they are. Yes, they are.
And
Mhm.
you and Joe had a twinning moment,
We did.
We did. We
We
both
did.
were wearing blazers.
right?
Yeah, mine hurt at the end of the night. I don't know about yours.
Really?
Well, I only had mine on for like an hour, and then I left the event. So
Oh, is it like high heel shoes or something? They're not comfortable?
I did have this conversation with a realtor who was wearing Nike Blazers, and he's like, yeah, after like the first hour or two, they're a little bit unforgiving.
Mm.
And I don't want to get into details, but like one side of my foot was just hurting, and
Oh, no.
it's been pretty consistent. But beyond the G Car event, like haven't been here in a while.
I know we had holidays. We
Yeah.
had Thanksgiving holiday.
How was your Thanksgiving?
Aside from the food poisoning, everything was lovely.
Why would the thinnest person in the room get food poisoning? And why didn't you call me?
I was sick.
I mean, send a brother a toothbrush so I can lick it.
But Tracy, your husband just got food poisoning
In Puerto Rico.
That's
Oh,
right. So
right.
did
You
you guys
remember
both
that?
get it again?
Oh,
We have a
shit.
historian.
He remembers that.
Well, I listened to your podcast.
So he's listening.
Yeah,
Thank
I did my
you.
research.
So
I know something's okay. So we take turns, people.
something with you two.
I know, right?
How was your Thanksgiving, Joe?
It was good. It was kind of uneventful. I've got a 2-month-old baby at home, and
Yes. Congratulations, new
yeah.
dad. He kind of
Thank
shaded
you.
me the other day, though. But go ahead.
What?
You shaded me about wanting to go home early.
Yes, I did. I did.
I'm like, I'm trying to get my miracle morning on.
Yeah.
And he's like, where do you have to go home to? And I'm like, well, it's by myself. He's like, you don't have a kid at home that's going to keep you up.
It was all right. You're telling one part of the story there.
Yes, the one that I received.
Yes. Well, it's the one where you were like, I need to go home early and I need to go to sleep so that I can wake up by 5 a.m. I was like, okay.
Yeah.
I wake up at 5 a.m. and I also am interrupted during sleep multiple times a night for hours at a time.
Wow.
I heard you have no one in your life, and
You know what? It sounds like you're hearing what you want to hear. I don't know.
so Thanksgiving was uneventful, Joe.
It was uneventful. Had a little bit of family in town. I think next year I will just cater a turkey.
Ooh.
I mean, the amount of work that goes into brining it, worrying about whether it's cooked. Tracy,
Right.
I don't know who cooked your turkey, but
it was a catered event.
Ooh,
So I don't know what it
okay.
was.
All right, but
no
it was
details.
uneventful for the most
Okay.
part. Yeah.
What about yours, Franklin?
I did not go back to New York. I was debating it, but
Uh-huh.
I've been traveling to New York a lot, and
Right.
I think traveling to New York or anywhere for Thanksgiving holiday is just a little bit goofy, and you're going to be sitting in the car a lot longer than you want to.
Nightmare ride.
And then all those people on the Amtrak, which is just not cute, and I'm never doing the Megabus because that place is crazy. So
Isn't it like a certain age where you shouldn't do the megabus anymore?
I have a whole
Thing about
dramatic story about
Oh, okay.
Megabus.
Oh, really?
It's like, if you don't have to take it, I don't care what the $20 is. I don't care what it costs. Do not get on the Megabus. That thing is ratchet.
Were you on one of the double-decker ones?
Yeah, it was a double decker. So I went home for Easter the first year that I moved to DC.
Okay.
And I'm like, oh, this is $20. It takes me right into the city. No big deal. I get on the bus. Sis, this is not where humans should be.
You understand why it's
Wow.
only $20.
It's $20. The bus driver decided to take his break in the middle of the ride. Then he turned the bus off, but he turned it all the way off, and then it didn't go back on. And then we were sitting there for 20 minutes. I'm like in the Jersey Turnpike waiting
Oh,
I'm like,
no.
I need to get an Uber to get out of here.
So you get what you pay for, basically.
You 1000% get what you pay for. Never doing that again. Sorry, Megabus. But this year I went to friends of mine who you know, Ho and Danny.
Mm-hmm.
We went to their house it was their first Thanksgiving in their home, and they did a really nice dinner. And Danny's dad and stepmom were in town, and it was a really nice,
Very nice
dinner. It was his first Thanksgiving that he was making, so honestly, I was very like, what's going to happen here?
Yeah.
But he did a fantastic job, and I'm really excited that I was able to spend it among friends.
Yes.
Awesome.
It's
I'm glad to
fantastic.
hear that.
Yeah, so we're all caught up, yes?
Yeah, I want to start talking about Mr. Joe Dawson.
All right, so Joe,
All
tell us
right.
about yourself.
Yeah, tell us how you got started into
What's
lending.
your sign?
So
Your background.
Aquarius.
Is that your real hair?
It is.
Oh.
Do you always look that good?
No.
You
No.
didn't wake up like
We're
that?
doing-
It took
I
work?
do
We're
not.
doing rapid fire questions.
Takes
now.
work. I told Kelly on the way here, I was like, I got to stop at Blue Mercury on the way back
Oh,
to get
too
some,
funny.
to get some face
Get
lotion.
some products.
Yeah,
Gotta tighten
running
up.
out. But a little bit about me. I grew up in Tucson, Arizona. I'm a military brat. So
Oh,
born in Atlanta, then moved to Kansas City, Fort Leavenworth area, and then to Germany for a couple years, and then landed in Tucson, Arizona. And all of that was before I was 4 years old.
Wow.
So, but I grew up in Arizona, and then my parents split, and that's what ultimately led me to the East Coast to go to college up in Baltimore. And after college, I studied political science.
What?
I
I
did,
studied political science,
but I didn't want to practice it. I didn't want to
Zero.
study it anymore.
Law school
so-
wasn't like.
No, I didn't want to go into law school and just not know if I wanted to do that. I didn't
Okay.
want to take on that debt.
Yeah.
So
thinking like a
my
lender
stepmom,
already.
my stepmom was in the mortgage business, and she was an area manager for a local lender here. And she said, hey, one of my loan officers has an assistant currently. That assistant wants to become a junior loan officer herself, and they need a new assistant. And you're living in my guest house and you have no job aspects right now.
So she put you to work.
She was like, it makes sense to just give it a shot.
Right.
Yeah.
So I did, and just did not look back. I loved the
Wow.
aspect of, work hard, play hard.
Mhm.
Mm-hmm.
The idea that as much as you're willing to put into it,
Mhm.
you can receive back.
Absolutely.
And every day is different. No
It is.
transaction is the same. We all know this. There's always going to be obstacles on any single transaction. No single transaction is without kind of having to go through some problem solving.
Interesting. So you've been in the mortgage world for a long time then.
Yeah.
Okay.
Almost 13 years.
Wow.
Yeah.
I did not know that.
Mhm.
Damn, Gina.
No wonder he's so smart.
Brother got some experience.
Absolutely.
But it's also an ever-changing market, right? We know this, and
yeah.
you know
Yes.
what guidelines and practices we are using today. It's ever evolving. Underwriting guidelines might loosen up, they might tighten.
Mm-hmm.
It might become a buyer's market versus sellers, and vice versa. All of those things are ever changing, so it's very sometimes tedious, but
Mhm.
also interesting to, on a day-to-day basis, just kind of be on your toes.
So what has been the biggest change that you've seen throughout the years?
I would say the underwriting guidelines,
Okay.
frankly.
They've tightened up, right?
So I came into the industry in 2010.
Mhm.
So right after.
So right when the Dodd-Frank legislation came down, I mean, there wasn't a 3% down payment mortgage,
right.
which we're experiencing now. But, I mean, no one was able to get loans unless they had all that money saved up in 2010, 2011. And the pendulum after the financial crisis in 2008, it swung to the exact opposite direction of very tight guidelines.
Mm.
And now we're like right back towards the middle.
Okay.
So you can still put down 3%, or you can use down payment assistance program and put down zero money plus get your closing costs covered potentially. But we as lenders are still documenting the ability to repay the loan,
Mhm.
which I think is a fair thing. If someone were to say, Franklin, I'm going to lend you $500,000, I need to verify that you have the income to repay that.
Yeah.
Mhm.
Seems like a fair trade, right?
Sure.
Absolutely.
You would be surprised at how many people after the financial crisis fought me on providing tax returns or pay stubs or W-2s and said, you don't need to see that information.
Well, I worked in subprime.
Okay.
I'm a little bit older than you.
Yeah.
Not that old, guys. But I got into subprime in my 20s.
And what's subprime
So
for our listeners?
subprime is so it's A papers, people who can go to a traditional bank
Mhm.
and qualify for a mortgage or apply for a mortgage. Their credit's pretty stellar, and they have a traditional job. They can get it moving.
Below market rates.
Excuse me.
Below market rates.
Yes, whatever he said. So I had a friend. I was working in real estate in New York, and I'm like, this thing sucks. And so my friend was like, do you want to work at my company? He had a mortgage company. I knew nothing about it. I went through training, and I sort of like moved up in positions there and ended up as an underwriter.
Okay.
And so the people, I like cringe when I hear their name. However, so I was working in subprime, and subprime is for people who have less than perfect credit.
Mhm.
And I want to call it the Wild Wild West,
Mhm.
because some of the products that we would push out or they pushed out were stated loans.
Yep.
Where you would just say, I am a school crossing guard and I make $160,000 a year,
Yep.
and my credit is 800, but I only have a Macy's credit card for $200 on it.
Yep. Honor
But-
code.
Yeah, I had to look through those things and judge whether or not they really made that money that the stated income that they had. We were trained to look at pay stubs that were potentially fraudulent.
Mm.
A lot of employment verification. Sometimes people provided fake credit reports.
Mhm.
So I have no envy for anyone who has to do that job, because it's very tedious and you're nobody's friend.
Mhm. Yeah. I mean, underwriters, at the end of the day, they are following guidelines set forth usually by Fannie Mae, Freddie Mac,
Mhm.
FHA, VA, and they're given this set of guidelines and they're told, all right, if it doesn't fit in this box,
Mhm.
you either need to deny the loan or you need to address it in some way. Hence why there's usually a lot of questions throughout the mortgage process if there's anything somewhat unusual. Now, I will say, if you work with a local lender, regardless of where you are located in the US, if you work with a local lender that knows that area, they're going to be more understanding of various jobs. So,
Yeah.
for example, I had at one point at my previous company an underwriter that was based out of California, because it was a jumbo loan. We had to send it to the investor that ultimately funds the loan, even though we as the mortgage company do all the front work. And this underwriter did not know anything about World Bank employees.
Mm.
They thought it was just literally a bank.
Right.
So they didn't understand that a lot of the World Bank employees are G4 visa holders. They're exempt from U.S. tax income.
Which is a beautiful thing.
Yeah, absolutely. And there's basically an equivalent of a W-2 that the World Bank issues showing, this is your gross and this is your net income. And it took a long time to get her to understand, like, this, we're not trying to fool you here.
Mm-hmm.
This is just outside of what you're used to looking at.
Mm-hmm.
Let's coach you through it.
Well, when you say local lender, you're not talking about like your branch that's at the corner of the street. You're talking about like, not like a national branch is like what?
Yeah. So I'm not saying like your local Wells Fargo
big
branch.
box
Right.
banks.
Yeah. Because all of those banks are gonna, they're big box, right?
Yep.
And they're used to working streamlined, and usually the underwriters that work there are not as willing to think outside the box, and may not be thinking about walking into their office each day and thinking, all right, how can I get this loan to work and make sense?
Right.
And still cover, can I curse?
Yeah.
Cover my ass.
Absolutely.
As an underwriter. But also, it just generally makes sense.
Right.
And, there's good and bad underwriters at every single company. The underwriters that I work with are ones that want to find a way to make the deal work.
Mm-hmm.
So if we come across an obstacle and we can't overcome it, we try to find a way around it.
Mm-hmm.
Legally, of course.
Yeah.
But looking at different scenarios that maybe it's not what the buyer necessarily wants to do, but it still provides an option to move forward.
Right.
If for whatever reason they didn't tell us about child support or alimony that they pay, or another loan that they had on a different property. Those things come up in our industry.
I had something fall through. We were under contract in Baltimore. This is before I knew you, Joe.
Mm-hmm.
And the client forgot two things. One, there's a little box on the application. Have you ever defaulted on a federal loan?
Mm-hmm.
And he checked no, not knowing that his student loan was
Mm-hmm.
considered a federal loan.
Mm-hmm.
So after we were under contract, that popped up. And then child support payments that he did not disclose to the lender. Yet he was just like, I sent him my pay stubs. He can see it's coming out of there. I'm like, you still have to disclose that.
Mm-hmm.
So because of that, the contract fell through. So people, if your lender tells you to fill out an application, trust me, he wants you to get to the finish line.
Yep.
Be very transparent with your loan officer. Tell them everything so that they can see how they can help you get to the finish line. Don't let it pop up midstream.
Yeah.
It can work against you.
Absolutely. It's much easier to tackle a problem or obstacle like that when we know about it up front, versus 2 weeks prior to closing. So it's a scramble for us. It's a scramble for you as the realtor. It's a scramble for the buyer, and everyone's pulling their hair out, and we're all trying to work towards the same goal.
Title's not happy either.
Yeah. Okay.
So Joe is a local lender.
Yes.
He's very familiar with the DMV area.
Mhm.
I always tell my clients, go with a local lender as opposed to the big box lenders. They have local knowledge. And honestly, if you
There's a
go with the
relationship.
big box,
Mhm.
they do other loans, auto loans, all these kind of loans, and they don't specialize in that. But
Mhm.
when you go with a local lender like Joe Dawson,
Mhm.
he is a local person, and he can have a little bit more flexibility, creative financing, I will say,
Mhm.
in terms of what the bank will offer, because that's all they really specialize in
Yep.
is mortgages, right?
Absolutely. And from a relationship standpoint, the DC DMV area, it's a small world, and it's getting tighter as the market shifts, and people might leave real estate or mortgage and things like that. But if I do a poor job, and I'm working with you, Tracey,
Mhm.
and I drop the ball, and then let's just say one of my buyers writes on one of your listings, you're going to say, well, Joe Dawson doesn't know what the hell he's doing.
Right.
Right.
And that can be detrimental not only to the buyer, but also to my business, because I'm like a realtor. I'm commission based.
Absolutely.
So it's definitely a referral business, and we want to do a great job not only for the client but also for the realtor.
Absolutely.
Yeah.
So I want to talk about some myth busters.
Ooh,
Okay.
Myth busters.
Yeah, myth busters.
What about them?
So Joe,
Yes.
I have been seeing on the social medias And this has been
The social medias.
the social medias.
Social media.
This tagline that has been going around for a while. Marry the house.
Oh, date the rate.
The rate.
Now,
Mhm.
there are a lot of people dating the rate,
Are they dating?
and then it just went down.
So just to comment on that, when you hear in the media that interest rates dropped,
Mhm.
keep in mind that those reports are usually a week old.
Sure.
And what I've seen over the past 13 years, it's very interesting when the media comments on interest rates drop.
Mm-hmm.
They may have decreased 0.125%.
Right.
But they kind of spin it and the headlines read as like interest rates dropped 2% kind of thing.
Mm-hmm.
So if the interest rates decreased 0.25% over the course of a week, that's still good for home buyers. But every single person's situation is different.
Sure.
So yes, date the rate,
Marry the house.
marry the home. And then I saw something recently
'cause
that divorce.
We have to be inclusive for those who get apartments.
Okay, so what's the other
Home.
saying?
I don't know why you're looking at Kelly. I think you're
Kelly is like my.
Kelly owns.
She confirms with me, if I'm saying something right.
Yeah.
We fall right into it. We used to work together.
Nodding your head over there.
She's like,
Okay.
continue, Franklin.
Yeah.
You're okay.
Yeah. But yeah, that's a very catchy phrase that a lot of people have been saying in terms of,
Is it dangerous?
I think it can be.
Okay.
I think it can be because if it's used by someone without fully explaining the situation, I'm worried that buyers might think, oh, well, this is absolutely going to happen within this specific amount of time.
Right.
And by what I mean by that is if you as a realtor or a buyer are thinking about, okay, I'm gonna date the rate and marry the home, and I'm thinking I'm gonna refinance within 6 months.
Right.
This monthly payment is $500 more than I want. I'm gonna refinance in 6 months and I'll be back to the monthly payment that I'm looking for. Keep in mind a couple things. Number one, we don't know how low interest rates are gonna go. We don't know how soon that's going to happen.
Right.
And finally, refinance interest rates are higher than purchase money interest rates. So as an example, let's just say the interest rate is 6% today for a purchase transaction. A rate term refinance might be 6.25%.
Right.
So same homeowner
Mm-hmm.
who bought the house, say their credit score is 780,
Mhm.
and nothing's changed. They bought the house and they got it at 6%.
Mhm.
If they waited 6 months later, nothing's changed. Credit's the same. They are now going to. I mean, they would qualify for a 625 refinance or along those lines.
Yeah, if the market stayed exactly where it was. Now we are expecting some kind of shift with interest rates to happen as the Federal Reserve gets a handle under inflation and hopefully mortgage rates decrease as well.
Mm-hmm.
But again, without as a realtor, what I would recommend doing is putting all of that in writing to the client in terms of, hey, you can always refinance later. Because I'm telling buyers this myself, you can always refinance later. If you lock in the interest rate right now at 6%, that's the worst case scenario for you.
And we do know that it's probably going to go down sometime in next year. We just don't know when.
Exactly. And that's the part that I think a lot of realtors just skirt around that last part. We just don't know when.
Mm-hmm.
And unfortunately, I think a lot of realtors are going to have homeowners that come back to them possibly in half a year or 3 months and say,
You told me
the interest rates were going to drop, and now I've got this monthly payment that I didn't want to begin with.
They may have to wait longer than 1 year.
Correct.
And that's okay.
Yeah,
You know?
absolutely.
But even so, like a refinance with that quick of a turnaround, the benefit to the
Make
borrower
financial sense.
cannot. I mean, there's very because the cost of refinancing still exists.
Yeah,
Right.
absolutely.
So they're not exactly just apples and apples. There's something else that's going to be involved in there. It's like you're closing on a house again.
Yeah. Anytime I talk with someone that's thinking about refinancing, I ask them, how long do you think you're going to hold on to this property?
Mm-hmm.
I know no one has a crystal ball, but how long do you foresee yourself holding on to this property, either as your primary residence, your second home, your investment property? Because if you're going to tell me you're not interested in being a landlord, and you're wanting to sell the property in 3 years, refinancing doesn't make sense.
Right.
Because it's going to take probably a couple of years to recoup the costs of refinancing before you truly start saving $100, $200, $300 each month. There's a general idea, I think it's mostly on the financial advisor perspective, that it doesn't make sense to refinance if the interest rate is not 1% lower or more.
Okay. So 1% change, then we call up Joe.
Correct.
Okay.
Now, I somewhat disagree with that.
Okay.
Because
should it be higher or lower?
Oh, the difference.
Yeah.
Okay.
It depends on what that person's answer is to how long they're going to hold on to the property.
Okay.
If they're going to hold on to it and it's their retirement home, their forever home, they want to pass it down, then, 0.25% or 0.3% can make that difference. And the break even might be 3 or 4 years.
Right.
But they're still going to be saving money in the long run.
Absolutely.
So I take the approach of just laying it out there for the client and consumer to make the best financial decision for them. But a lot of people think the interest rate needs to be 1% lower for it to make sense to refinance.
Right, but we can do it potentially sooner than the 1% is what you're saying.
Exactly.
And not only that, when it is time to refi, you'll save in terms of your monthly payment. But also, we were in a training session earlier today, and we were talking about the 4% appreciation average. Do you want to share a little bit about that? Because I thought that was a great soundbite that people should think about.
Yeah, absolutely. So in the DC area, the historical appreciation of property and real estate is 4% each year. And that's the average. Now, there's up years and down years, like during COVID. It appreciated, in some areas, 15% year over year. But then we might have a down year where it might appreciate 2%, for example. But if you look at the past 10 years, for example, you see a 4% average year over year increase in appreciation. Now, what that means is if you were to buy a $500,000 home today and it appreciated 4% each year, Frank, quick math, what is that?
You asked wrong dude.
Okay. It's
wrong gay.
All right. It's $20,000 per year. Okay.
$20,000 was my first guess.
$200,000.
So over the course of 10 years, that property would have appreciated $200,000.
That's amazing. When you said that, like my eyes just
Yeah. So $200,000 is a lot of money, and probably if you spoke to anyone that invests in stock or bonds, is interested in that kind of thing whatsoever, if you showed them the historical data to support a 4% appreciation year over year, they would say this is a no-brainer. Yeah, I might have one great year with the stock market of 15%, but then I might have a heart attack when it drops by 30% kind of thing.
And you're not dealing with the fluctuations of the market that are dependent on world politics, legislative things, people not feeling good about themselves for whatever reason. I mean, real estate just kind of sits there and does its thing.
Especially in this market, we're insulated in a good way, I think.
Yeah.
And we know the same realtor that gave the analogy of, think about floodwaters. If you're the house high up on the hill, you're going to be the last house to be impacted by those floodwaters, and the waters are going to recede fastest.
Got it.
So thinking about it that way versus many buyers thinking about the interest rates and the monthly payment right now, which I totally get and understand. But if you take away, potentially renting and paying that monthly payment, paying for a housing payment that you're also investing in at the same time, and on top of that $200,000 in appreciation, you're paying down your mortgage balance yourself. I mean, after 10 years, the net gain, close to 300,000 probably.
That's
is
wonderful.
My guess.
So then sometimes we shouldn't be so laser focused on the interest rate, especially if you're buying in a neighborhood that's trending upwards. And some neighborhoods in DC had double digit growth.
Yeah.
So conservatively, we were talking 4%. That's a very conservative number.
It is.
So
it's
people can come out ahead if they think about buying in DC.
Yes, they can. Frank?
I'm just the timekeeper today.
Okay.
So we're gonna wrap our first session here. We're gonna do part 2, and Joe's gonna do a little bit of a quick fire session. Yeah, I'm excited. So guys, thank you for tuning in today. Thank you, Joe, for sticking around with us today.
Where can they follow you?
Yes, on Instagram at Dawson, like Dawson's Creek,
Oh,
Dawson Home Loans, and www.dawsonhomeloans.com.
Awesome.
all right. We'll put that on our Instagrams.
Absolutely.
All right, guys. We'll
Grams.
see you soon or talk to you soon. Bye.